We've had a great run in terms of households coming out and putting their money in mutual funds in the last 2 years.
Yeah.
But recently we saw, a sharp correction in the markets, and there were a lot of experts saying that we expect SIPs to stop, we expect new investors to hold back and not come in. Is anything of that happening? The numbers, while they look a little bigger or at least, constant, it's difficult right now to say whether the person who was investing has stopped and a new person came in instead. What is your experience? What are you seeing with investor behavior?
See, broadly the inflows in our equity funds, if you see the market dispersion, broadly the inflows are of 3 categories. One is the discretionary investment, where somebody has some money and today he is deciding whether to invest it or not. Second is the systematic, the SIPs which are already registered, so every month the investment is going to happen. And the third is also part of discretionary, but typically NFOs keep coming. I think they are a big instigator of people to come in and put some money or not. So if you ask me, it's the SIP flow which is still rising month on month. So every month, let us say when the markets were booming and people were a bit more excited or a bit more motivated, maybe it was rising by 200 crore flow every month. Now maybe it's rising a little bit slower. But as we speak, there is a 8,000 crore inflow which is coming in just by way of SIP registrations. What has declined is the discretionary investment, and what has declined is the NFO related collections. So if you ask me, I think the SIP flow which is registered systematically, I think that is the more stable part of what is happening in the market. And my guess is that people who make discretionary investments, they are always more likely to be reacting to what is happening in the market. And unfortunately, whether you like it or not, we are not able to see enough demonstration of that contrarian behavior. When people sign up, at that time they are all long-term investors. But the first knock of 10% and the whole long-term goes out for a toss. I'm not sure who it was. I think it was Mike Tyson or someone who said, I think Muhammad Ali said that everybody has a plan till they get punched in the face. So, we are lucky we are actually not in a boxing match. I mean, we are just seeing some notional...
And would you say, Aashish, that's because the investor has matured in many ways? Because probably 3 years back or 5 years back, you would have seen a huge sell-off.
Yeah, 3 years or 5 years back, if you really ask me, there would have been more wild swings in terms of the investment that was coming in. In fact, 3 years back or 5 years back, right now I'm discussing with you lower inflows. If it was 3 years or 5 years back, maybe I would have been discussing with you about outflows.
That's right.
So at least we are not witnessing that. I think that's a healthy sign. So there is more maturity, and I really think that people should be willing to commit a lot more. I don't see too much of downside in the market considering where we are. In fact, I see a new cycle actually beginning. So people should be willing to remain committed, and those of who have stopped those discretionary investments, I think they should come back actually.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.